The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour in a brand new year. And of course, even in this year, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, what do we have on a brand new year? S&P's up about 9 points. We were up higher, 2263.88. And so we're down a little bit off the highs. This 2250 range, 2265 range, I suspect we're kind of going to go back and forth a little bit until we find a direction in the market. I was saying in the newsletter last week that if anybody's been sailing, if you're dead in the water, you got to get the sails up. You got to get a little bit of movement so that the keel and the rudder give you a little bit of ability to steer in any direction. That's kind of what we're looking at now. Saw a lot of people decide that they were going to jump on long at the open, and then, of course, by 10 o'clock, everybody was deciding that it was time to go short. Volume is okay, 2.3 billion shares as we start the show. My guess is that a lot of people are not back in the market. They will be back tomorrow from their vacation, especially people on Wall Street. A few stragglers out there. So today, probably not a big a deal as some people would think. My call for this, at least the first part of the year, or at least my working strategy, is that the markets and the indexes are probably not going to go anywhere too fast. We're 17 days away from the inaugural. In fact, just a few minutes ago, the new Congress was sworn in. So we've got kind of a little bit of a window here where we're waiting and warming up to find out what happens. But, we've got just a little bit of indecision. By the 20th, though, we will be into an era that is very familiar to us, and that is back into earnings. I went through all the earnings, getting ready to put it in the newsletter for the entire month to lay out what my strategy was. But I think that overall, in a new year, at least for the moment, I'm not looking for a giant pullback in the market, nor am I looking for higher prices in the market. I think we're a little bit range bound for a while, and we're going to have something to bust us out of that range. In the meantime, the money's going to be made in what the market does the most, and that is revert to the mean. The stocks that did the best last year are probably going to pull back a little bit, not be the leaders of the market, the FANG stocks. Kind of started seeing that about mid-summer. I started saying things like, I think we had peak social media. Some of these other stocks, there's a handful of them still kind of driving a little higher. Microsoft, again, to today is a good example. Netflix kind of pushing back higher. A lot of those stocks just pushing higher, though, on far too many shorts in that particular equity. But my guess is that the indexes are not going to move a great deal, that this is going to be a stock picker's year, and that the big money is going to be in reversion to the mean trade, shorting the stocks that have been the highest flyers like NVIDIA, and, of course, being long stocks, that the ones that were most hated going into the end of the year. Anyway, that is at least until something changes the way I'm looking at it. And, the first thing we've got to do here, as always, is get some history behind us so we know what our future will be.
That it's all just a little bit of history repeating.
On this day in 1961, in the climax of deteriorating relations between the United States and Fidel Castro's government in Cuba, President Dwight D. Eisenhower closes the American embassy in Havana, and severs diplomatic relations. The action signaled the United States were prepared to take extreme measures to oppose Castro's regime, which the U.S. officials worried was the beachhead of communism in the Western Hemisphere. Of course, he had rose to power not too much earlier, a year or so, and was busy throwing anybody that disliked him into a pit. And they were dead already, of course. There's several pits that have some almost 20,000 people in them down there, depending on whether they just were disliked by Castro or gay or, variety of reasons. But they got a different pit for each one of them down there. Kind of interesting that as long as you're one of these guys, there was no real price to pay except for the people underneath them. But again, we see something that most people, or a lot of people that are communists and socialists see, and that is it has not worked. For 6,000 years, people have tried. And history is replete with people thinking that communism and socialism are a thing that can work if it just gets tried by them. We tried in the last 8 years for a semi-socialist kind of healthcare system. We found out that prices again went higher. And this leads me into a discussion before we get into some other things of what to expect in the future. I wrote a little bit about this in my daily newsletter, but I think if you want to take a broad look at this year and what a Trump administration will bring, probably the closest thing, I've read a lot of different things about what Trump has done in the past, his books. And probably the most illuminating thing about what's going to happen in the future came from one of his buddies. And that is that he is truly a big fan of Ayn Rand. And this kind of came to him as he continued to try to build buildings in New York where everybody had their hand out. Everybody was on the dole. Building inspectors wanted to get paid off. You had to pay off and fund people like congressmen and senators. I think he kind of sees himself as a John Galt. That while a lot of people keep dismissing him, they do so at their own peril. The press, who was apparently wrong for the last year and a half, is deciding to continue to be wrong, posting fake news stories. I'm not asking you to agree with Mr. Trump's view of Atlas Shrugged and Ayn Rand, that his decisions will be colored very much like that. He is just, I think, secretly disdains most politicians. He didn't have any problem giving the what to several who claimed to be conservative and sold themselves out for 30 pieces of silver. But as we look forward to the new year, I think if you don't know about Ayn Rand or Atlas Shrugged, probably a good read if you could read it with your mind open to understand what a lot of people think. I think he looks at a lot of people as losers and looters and thieves. And he kind of said it as much in the last year or so. We'll talk more about this in the moments.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And what else do we have going on out here? And my engineer wants to get to me through Yahoo, and that no longer works for me. I don't know what's wrong with Yahoo. But it keeps on wanting to actually ask me if it can send a message to my phone to confirm that it's actually me. I go through it, it doesn't do it, and it won't let me log in. So who knows what to say about that. Hopefully they're listening and they will just IM me in the Tiger's Den. Anyway, I'm not trying to endorse an idea of what is right, only how someone will act in the near future. And I think even if you do not agree with him, you should know you're going to trade against a lot of this. And I think a lot of people have just been wrong for a long time. And not that he is particularly right, Donald Trump, but you should know what motivates him if you want to trade in the future. You can always give me a call at 877-927-6648, and we'll continue on. Anyway, market 2248, something like that. What else is going on out here? In the news, not a lot happened over the Christmas vacation. But it is it. Apple was probably the most interesting thing I saw, mostly because they were able to sneak it in with almost no one talking about it on Friday. But they actually stuck this little ditty in a news paper over in Taiwan, and it got very little press. I think they did it almost exactly at the time that something happened, an attack or terrorist attack or something, and it got buried during the news, but Apple is expected to cut back its production of iPhone devices by about 10% in the first financial quarter of 2017 due to slower than expected sales, according to the Nikkei Daily. Okay. Well, interesting enough. Hopefully that fixes it now. Anyway, Apple is expected to cut back from iPhone devices 10% the first financial quarter of 2017 due to slower than expected sales, according to the Nikkei Daily. I don't know of anybody thinking that this is a big surprise. Everybody knew that Apple was doing kind of weak going into the end of the year. No one from Apple, especially the CEO, could really speak how well that the iPhones were doing. He basically kept on saying the little new earbuds, the wireless ones, were the ones that were really going to move, and they were building them as fast as they can. My guess is that they didn't build enough of them to begin with, but there's a lot of what's going on in Apple. And, of course, I think their next earnings are going to be rather critical for them. They are looking forward, and at least from what you can tell in the blogs and in the news for semiconductor businesses in Taiwan, that it looks like those guys are going to get very busy in April. That means that you should be looking for a iPhone, very new iPhone, probably in April or May. So that's it. It's I don't know if there's a whole much more to say about that, other than they did a extremely good job of burying this. We've talked about this before, and that is the data dump. That is, if you've got something you don't want to tell somebody, you wait until someone dies or a terrorist attack, and you bury the news in it. Apple seemed to do a very good job, but do not be surprised if this quarter is whiffing quite a bit, with them at least turning down the current iPhone 10%. My guess is that they'll even sell less of that. A lot of people waiting for the next generation, and actually for somebody to figure something out. Earnings, as I said earlier in the show, I'm not expecting a great deal to happen in the near future. That is, that I think we can bounce around here in the indexes for a little while. But starting about the 15th or so, about mid-month, we're really going to start having some big and heavy hitters come into earnings. This week, only a couple of them. Constellation Brands, which is going to give us a little bit of a read on what's going on in retail. Monsanto, who's getting bought out, probably not a lot going on. And then after the bell on Thursday night, we've got the Container Store, relatively new IPO. So not a whole lot going to move the market this week. But, man, when we get into next week, that is going to change. We're going to start seeing from the drip this week to maybe a little bit of a stream next week and a river as we go into the last week of the month. That's why I suspect that we're probably not going to see a lot of action right off the bat, but a lot of sideways action and building. And again, I think that this market is going to be a stock picker's market, probably until we get into those earnings and see how a very strong dollar is affecting the markets. Anyway, that's it for a mad market. We're going to go into some other stuff out here. And what else can we do? MasterCard. I had a lot of stocks out here that were gapping up today. MasterCard and Visa looked kind of interesting. A lot of these stocks, of course, were higher earlier in the day. The gap has pretty much held on most of these as we kind of hang out here at about 22.48 on the S&P cash. I don't know. We'll look at some other ones out here. The IBB was up a little bit more. You had a little gap in some of these biotechs. These things are going up right to the resistance levels like Amgen. So we see it gap up, continue to move higher out here. You needed about 11 million shares if you want to be conservative, 18 million shares if you want to give the benefit of the doubt to Amgen. But today, just 2.2 million shares. So a lot of these things are just hanging out at these levels. I don't see a lot of selling pressure, though, when I looked at the tape out here. What else do we have? We'll go through the rest of these in the, let's go to the 52-week high, because I think those were a little bit better out here, or at least better to see. Let's go out here to a 2-year chart so we can see a little bit. Apple Hospitality REIT was making a new 52-week high. American Express, as MasterCard, the same kind of thing, going through its 52-week high today. Again, volume is not really that strong today, but we'll have to see as volume comes in over the next few days. When we look at BP, also another 52-week high, right against its resistance levels that have been at that $37.50 level for almost a year and a half. We'll be back shortly.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. I don't know why this thing keeps flipping over here. And I don't know why, but I'm going to try to do it again here. We'll see if this does not get everything back to normal. Keeps flipping off of my timed application. Anyway, hopefully this solves it. I don't know why it keeps on going back to stills after a while, but it does. We'll figure this out soon enough. Anyway, BP. Nice pop in BP. You got 7 million shares. You need 8. So some of these things not looking all that bad, at least the energy sector, a little bit better than the rest. I'm thinking that we're kind of in fairly rarefied air, though, in these energy stocks, mostly because there isn't just that much. There isn't that much more supply than demand. I know that everybody's looking for anything to pile into for safety, and it hasn't been gold, and it has been crude. But I think that they're really pushing awful hard on it. Of course, every dollar that crude goes up means that there's going to be more production, which means that it just brings the price back down. As one of our old hosts used to say, the best cure for a high price is a high price. That's what kind of makes me worry about it. Now, Halliburton, not anywhere close to the same kind of juice that we saw in BP. Is saying on the 12th of December was up on 10.5 million shares, 8.6 million shares, but we could still get to that 10 million share move yet today. Other stocks up on their 52-week highs is JP Morgan. Probably would like to have a little bit more juice in this one. This one actually probably a little bit more in the danger zone. It did go higher. It did break to a new 52-week high, and it has pulled back into the trading range. So we might look at some of those. What else is on my list here that would be interesting? VLO, 52-week highs. Again, this got to $71.40, 3.16 million shares. And what do we have here? Yeah, January 3rd is today, all day long. 3.16 million shares. Now, this one, and Valero is holding it. So if you're thinking that energy does continue higher and you're an energy bull, everybody seems to be bullish on energy, which always makes me worry a bit. This thing did go higher, and unless it gives back all of its gap up today, looks like to me it will continue to hold a 52-week high on the close today. Let's take a look at some of the other stocks. Well, one's deserving a losing horn today. NVIDIA. And now, this was very interesting when I was watching it earlier this morning, because at 8 o'clock, this thing was printing about 110. They had run it up all the way. And by 9 o'clock, the thing was at about 108 trading market. By the open, I think it was about 107. And opened at around 105. Actually. So this thing's been kind of under pressure all day long. If you read the Tech Insider, I told you the reason that long-term NVIDIA has some problems. Short-term, this is just one of those stocks that was and is a parabolic move. Eventually, these things retrace, and when they do, it does fairly strongly do that. Now, you had your blow-off top on December 28th. At 119.93, came down with significant volume, tried to rally the next day, didn't do so much, came back down a little volume. We're matching about Friday's volume so far today. So, where do you come back on this to figure out where you're coming? This thing really gapped away at about $72 to $78. Did so on a lot of volume. That is probably the only safe place to get it. But again, there's a lot going on in what is happening for NVIDIA. I think that, eventually a stock that continues to go up like this will overrun and get way out over the tips of its skis. I think that there's a bigger reason to think maybe the back half of this year could be disastrous for NVIDIA, but we'll have to see what happens. There's a few competitors that are going out and could take up a huge position and part of their business. But again, good reason to subscribe to the Tech Insider, and you would already know what that competition would be. Other stocks that deserve the losing horn today is Xerox, and that is it. Down on huge volume, and that is what else could you say? Just a nice tank down. Well, you got 31.5 million shares. And no carbon copies for this company today, is there? I didn't look and see what was actually going on in this one. The control? There we go. But now, when you talk about one that just blew up, that's it. I mean, it went through all the previous lows, that $8.20 area from February last year and January of last year, about a year ago. Had some okay volume. This one was always dangerous because you never tested that January 20th low of 2016 with lighter volume. You tested it with almost exactly the same volume. So you really were going to be nervous in this one until it came back and retested it with lighter volume. You never got that opportunity. It blew through. But until it would have tested that $8.20 area, I don't see how you could have been long that one. Did we go gap ups already? Let's go to percentage advancers out here today and take a look at them. Alon USA Energy. Don't know much about this stock, but as a percentage gainer today, one of the big ones out here today. Again, making a nice new breakout with volume. I'll have to find out more about that one later. Depot, DEPO, which is Depot Med. This thing gapped right back up to where this thing gapped down, and it's doing it with more and better volume. But when you look at this one, if you were thinking short on this one, you were wrong. I would have liked this thing just to go 4 cents lower. You never got that opportunity, but this one was beautiful. The November 8th low at $17.42 came in with almost 11 million shares. You tested that with December 29th with 1.4 million shares, and that's exactly what you want. You see any stock testing a previous low on 20% volume, you got to be all over it. I was hoping for this thing to come back just a little today when we were watching it, but there's a handful of stock, not a lot, that are set up with this pattern. Let me zoom in a little bit more out here. And that is this, you have a nice move off this low. You came in with some decent energy, got up to its previous gap down, and then it pulled back on very, very light volume all the way from that November 15th high. That's exactly what you're looking for, combined with that nice test on 20% of the volume. This is what I live and die for. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Anyway, we're looking at a few of these stocks in the percentage advancers today as we wait for the market to start getting some legs underneath it, give us some direction as which way it's going this year. But again, we got 2.5 billion shares on the New York Consolidated Tape. So far is, in September, this would have been a pretty good day for volume. But we've gotten used to a lot of volume over the last 6 weeks. And so this is a little on the downside. I suspect that by tomorrow or maybe the next day, that by the end of my show, we're probably going to be in the 3 billion share category as everything fires back up. Probably have just one more day of a few stragglers getting back to the market, and that is it. For positions, I added one long position in the Tech Insider today. It's doing fairly well. But again, I'm not picking any indexes. I'm picking individual stocks so far. I will let you know if that changes, but I don't have a lot of faith in anything other than a trading range until we maybe get out to the 15th or 20th of the month, and the big money is going to be made in individual stocks or probably commodities. Anyway, we were talking about Depot. This one gapped up fairly nicely, right back up to where this thing gapped down not that long ago. Volume has been pretty good. Watt, which is a company that makes a lot of plumbing supplies, tried to gap a little higher today. Didn't, pretty much faded back. So we'll look forward to those. Again, I think it's next week. I will look at it again. We're going to start running into some housing earnings, and that will probably give us a clue on other stocks that surround housing. Although I think the numbers out this morning were down about 2% on existing home sales. Let's see if there's anything else. Fitbit. Again, when we're talking about stocks at the beginning of a year, there is a big tendency to revert to the mean. Kind of looked at this one, but, I thought there were stocks with better stories out there and better patterns too. But this one did not look all that bad. But there is a tendency, even for the worst stocks in the market that were sold for tax reasons into the end of the year, to finally have none of those tax sellers left Fitbit probably fits this mold. I'm not saying this thing does not, and it kind of looks like it's going out of business, but can it survive for 6 months or a year? Certainly can. And these are the stocks that revert to the mean. The mean on this one probably somewhere around $11. So while there's a lot of room to run in this stock, it's a bit risky to stick in a newsletter. And my faith is not as good as some of the other stocks out here that were acting much better. I dislike this one probably and picked other ones that I like better, mostly because they were over $10, which means that funds can go back and buy them. Of course, percentage changes in these are pretty good. But when you look at some of these stocks that have been absolutely slammed down, just know that the first 15, 30 days of the year, a reversion to the mean is not beyond the realm of possibilities. I would much rather be short or thinking stocks that are going to go down, ones that tested previous highs on light volume over the last couple of weeks, not ones that are down here in the basement already, betting that they're bad and going to get worse. That is generally, at least the first part of a year, a tough road to hoe. Got some emails. You can always email me at path@tfnn.com. We got a few of them. Okay. Okay. Want me to look at Amazon to see whether my opinion has changed at all in this. And, you know, we're coming down a little bit lighter volume out here. I don't think that there's anything that could move Amazon beyond the next earnings call. It's probably trapped at this higher level. But for the reasons that it sold off in previous years, I suspect my call on this stands, which is this does have the ability to go back and test this giant gap, which is in the 610 to 660 range out here, and that is where a lot of volume is. You came down, you set up a kind of an ABC, and then it takes you directly to that 600 to 660 or 650 gap out here. Now, a lot of people think if you're setting up an ABC, it just instantly goes into an ABC. Normally, when you have a big move off the top like Amazon, it will go sideways for a while. And this may even go to the next earnings call, which I think might set up the next move. But just because these things go sideways doesn't mean the ABC is over. Just means that it's consolidating and setting up. Now, maybe I'm wrong. Maybe this goes higher. But I've seen too many stocks just go sideways after disastrous earnings calls, a lot more spending, which is always what people are worried about in Amazon and have been in the past. Maybe that changes in the future, but I don't see any reason why. But I don't see any reason why the ABC from the October 6th high to the November 14th low to the November 22 high out here, which is 792.40, does not continue to set up. Let's do the expansion out here so you can see it. I don't see anything that changes that real move out here in the ABC. Let's zoom out just a little bit here. Where do I want to be? I want to be about there. And that 1-to-1 sets up at 655.29, which is just the top where this thing originally took off. So that's probably where you would want to be looking at for this thing to come back. I think that ABC is an intact. Just because it goes sideways does not destroy an ABC, in my opinion, anyway. And I'm still looking for that 655.29, which is the 1-to-1 ABC, before you would want to buy Amazon at all. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can put a message in the den. See what else we have out here. Anything else? Looked at Amazon. Microsoft was up a little earlier. Didn't get a chance to check in on that one. It has kind of come off a little bit off the 64.10, volume has not been all that exciting so far. In fact, let's clean this chart up a little bit and zoom in. It kind of came off the 64.10. Now, this is exactly what you want if you're bullish on this, which is a nice low volume pullback into that high. In fact, you had a nice day on the 19th of December with 33.4 million shares. You were down on Friday with 25 million shares. Today, you're kind of a little higher open, lower close, but just 12.9 million shares so far. I wouldn't be buying it here. I just don't see the risk reward in it until you get back down to about $57.50. But hey, that's just me. Anyway, we'll be back shortly after this timeout. Got plenty of time to call me at 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. 2249 on the S&P cash. We're up 10. Got a little bit rationally bullish in the morning. We were up to 2263.88 on the S&P cash. Volume is not bad for the first day of trading as we come back into the new year. I'm thinking that we bounce around here for a little while, and I am neither bullish nor bearish on the S&P or the rest of the indexes. I think we're kind of just stumble around in here. And earnings are probably going to point the way forward, but again, that may be a week or two. Individual stocks are probably where it's at. Anyway, we looked at Microsoft. Question about looking at NFLX out here. Again, this one bounced off its recent high, but did so on very light volume. You need to be very worried about Netflix if it cannot the October 24th high. That high had 18.8 million shares. You went in and you tagged it about 20 cents light on December 28th with 7.8 million shares. Now, maybe you want to give it a mulligan because it was late in the trading year. But what you don't want to see this thing do is get up there and stay on lighter volume. Now, Netflix, I think, is another one of these that is coming up with its earnings date. Yeah, January 18th. And whether these companies are doing well or the market is doing well, they tend to hold up all the way through earnings. Netflix is one of these stocks that you want to be very worried of. If it does come out with anything that's decent, this one, again, has another 6 or 7 days to cover. I just can't see wanting to be short the equity. If you were going to do anything at all, you'd have to be in the options, and they are incredibly expensive. So not much to do out there. Microsoft, Intel, Amazon. What else is going on out here? Question to look at IBM real quick. IBM, I think, is the 25th or 28th of the month out here. This did break its previous highs. It really kind of came out with some decent volume back here on the December 13th high, 169.95 with about 6 million shares. This thing's gone sideways still. Again, these are some of these stocks that are rolling into earnings. The pattern has been for the last year or two is to gently move up into those earnings so that if you were thinking of shorting these stocks again on earnings, man, you got to wait until probably 5 minutes before the close before earnings and watch them there. Other stocks of interest, question about IBB. Got a lot of emails flooding in here at the end of the show. I kind of like the way this thing acted earlier in the morning. It's been looking at this level at about 265 as support. One of the things that does happen when we go into the late December is that a lot of volume comes out of these stocks, and you start to see kind of a part where there just isn't enough momentum in something that is nothing but momentum, like the biotechs. And you need a little bit more going on in them. Little discussion that Trump is not going to be good for biotechs. Again, I am very worried that, and won't be short the biotechs out here until we get a little farther into January. Anything that's really been beaten up over the last year has the possibility of getting into that reverting to the mean issue. And I would rather pick off stocks that were testing highs on lighter volume than trying to continue on the downtown train until we get a little bit farther into the month of the new year. Anyway, as always, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.